Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VORNADO Realty Trust quarterly report. VORNADO Realty Trust is a fully integrated real estate investment trust that conducts its business through VORNADO Realty LP. The company provides various services including real estate investment, property management development, and construction leasing, and rental services, financial services, through subsidiaries consolidated by VORNADO. VORNADO Realty Trust's stockprijs ist im Vergangenen jaar etwa -851%, -1022%, und -1302% gesunken. Der Hauptgrund für diesen Rückgang waren mehrere Faktoren. Die Verfehlung der Juenerwartungen im 3. Quartal 2025 führte zu einem starken Absinken des Aktienkurses über 3%. Herausforderungen Zukunftsaussichten und ein einmaleffekt Narrativ, trugen zur Skepsis der Anleger bei, de Analysten einen starken Rückgang der Juen von 838% pro Jahr in den nächsten 3 Jahren prognostizierten. Herabsetzung der Kurse durch Analysten führte zu einer negativen Stimmung. Die Schwäche des gesamten Bourmarktratsektors belastet VORNADO Realty Trust, de sich auch die branchenweiten Faktoren wie Trends zur Telearbeit, wirtschaftliche Unsicherheiten und Zinsschwankungen auf den Bourmarkt auswirkten. Der Druck durch Schulden und Dividendenauszahlung war ein älteres Ereignis, aber nachhaltige Auswirkung, die sich auch im Vergangenen Jahr auf die Aktie ausgewirkt haben. The primary drivers of revenue growth and decline can be identified through a review of the financial summaries. On the growth side, rental revenues, fee and other income, prepaid lease payments, depreciation and amortization, gain on sales type leases, net gain on sale of partially owned assets, and interest and other investment income have all contributed to increased revenue. Conversely, decline in revenue can be attributed to a decrease in gain on sales type leases, straightlining of rents, and income from partially owned entities. These factors highlight the importance of various revenue streams and their impact on overall financial performance. Net income and profit margins. A dramatic shift. The financial performance of a company has undergone a significant transformation in recent quarters. The net income has made a remarkable turnaround, increasing by 99% from -$19,468 million to $19,239 million in Q3 2025 compared to the same period last year. This trend continued into YTD 2025, where net income skyrocketed by 66.17% from $14,358 million to $932,290 million. The profit margins have also seen a substantial improvement, rising from -4.4% in Q3 2024 to 4.2% in Q3 2025. This increase is even more pronounced on a year-to-date basis, with the net income margin jumping from 1.1% to 68.8%. The reasons behind this dramatic shift are multifaceted and likely influenced by various factors such as changes in revenue, expenses, market conditions, interest rate fluctuations, and sale of assets. Whatever the underlying causes, it is clear that the company's financial performance has undergone a significant transformation, with net income and profit margins experiencing a substantial increase. The company's financial performance indicates a strong trend of generating positive operating cash flow. Specifically, as reported on page 13, the 9-month period ending September 30, 2025, saw an operating cash flow of $1,112,112. This significant figure demonstrates the company's ability to manage its finances effectively and generate substantial revenue from its core operations. The company's debt level has undergone significant changes over the past year. Initially, total debt decreased from $7,242,980 to $6,185,569, a reduction of $1,057,411. However, new financings were entered into, including $407 million and $675 million for specific properties, which may indicate an increase in debt levels. Nevertheless, liquidity increased by $2.6 billion as of September 30, 2025. Regarding interest expenses, there has been a notable decrease. The weighted average interest rate dropped from 5.76% to 4.76%. And interest payments decreased from $236,892 to $234,495. Furthermore, interest and debt expense decreased by $16,400,000 $448,000 and $21,582,000 in different periods, indicating a reduction of 7.4%. Overall, the company's debt level and interest expenses have changed significantly, with a decrease in both areas. Management's outlook on company strategy. The company's management has outlined several key strategies for its future growth and development. A significant milestone was achieved with the completion of a master lease with NYU to lease 1,076,000 square feet at 770 Broadway for a 70-year term. Additionally, the redevelopment of the 623 Fifth Avenue office condominium into a premier boutique office building is underway. The company also plans to fund development and redevelopment expenditures from operating cash flow, existing liquidity, and or borrowings. Specifically, it has already expended $724 million on the PNN2 redevelopment project, which is estimated to cost $750 million. Furthermore, management intends to pay a common share dividend for 2025 in December, subject to board approval. Management continues to monitor the insurance market and evaluate other development opportunities at certain properties in Manhattan, including the PENN district. Overall, these initiatives demonstrate the company's commitment to growth and expansion through strategic redevelopment and investment. Vornado Realty's acquisitions and divestitures overview. In a series of strategic financial moves, Vornado Realty has engaged in both acquisitions and divestitures to optimize its portfolio. On the acquisition side, the company issued common shares for the redemption of Class A units by limited partners, solidifying ownership and control. On the divestiture side, Vornado has made significant gains from the sale of several high-profile assets. The most notable include the 666 Fifth condominium, sold to UNIQLO for a net gain of $76 million, and the 770 Broadway master lease with NYU, which yielded a substantial gain on sales-type leases of over $803 million. These transactions demonstrate Vornado's ability to adapt its portfolio to changing market conditions while generating significant revenue. The company, Vornado, has demonstrated its commitment to returning value to shareholders through various means. Notably, it has paid dividends on both preferred and common shares, indicating a consistent effort to reward investors. Additionally, the company has engaged in share buybacks, repurchasing 2,024,495 shares, further enhancing shareholder value. That concludes the financial summary for VORNADO Realty Trust. Feel free to comment below, and I will be happy to answer them when possible.